All right, what's up, Mortgage Coach and Trust Engine community? I am super excited about this interview. Adam Contos is today's special guest. Last time I interviewed Adam was in October 22nd of 21. I don't know if you remember that, Adam, that it was uh, it was kind of an exciting time for me because that was a couple months before I had my private equity deal and sold most of Mortgage Coach, about 70% of it. But I think you had just come off the CEO role of ReMax a couple months before that. Is that right?
Yep. Yeah. What was it? April 1st of 22. So yeah.
Oh, so you were actually the CEO of ReMax at that point in time.
Yes, I was. Yeah.
So for the audience, I want to do this interview around getting ahead of NAR, and I reached out to you because one, I knew you were the CEO. We interviewed you. I thought it was months afterwards, but it sounds like it was a few months before that. Why don't you share real quick about your role there, and then let's have a conversation around how the mortgage and real estate industry can get ahead of this NAR settlement and turn it into an opportunity.
Sure, Dave. So I started with Remax early in '04 and worked my way up doing, basically servicing as a business consultant, the franchises, the different brokerages that are in the Remax network. And the way Remax was set up is regionalized. So I started in the Mountain States region, became the vice president of the Mountain States region, took over California, Hawaii, right as the market fell off the cliff in '07. Worked there for 3 years, keeping the wings on the plane as we're in flight during all of the REO and short sale issues, spending, most of my life talking about REOs and short sales. And then went to Florida and did the same thing. And then took over the rest of the US, took over franchise sales, and then working my way up into picking up HR and IT. And then went and got my executive MBA in this process. So I think, 2,000 hours of education, 2,000 hours of employment work, and also some volunteer work on the side because I love to volunteer. And then became the chief operating officer and then the CEO of ReMax. I was the CEO of ReMax for 4 years and a board director. And then I left ReMax so that I could do some investments with a good friend of mine who happens to be the largest shareholder of ReMax. So based on being a public company, Sarbanes-Oxley, got to follow the rules there. So Dave Liniger and I started investing in a few companies and, just been doing that. We've got some different franchise brands. I actually have I'm the interim CEO of a sub sandwich company, which everybody's like, what's that got to do with real estate? The answer is it's franchising. Franchising is franchising is franchising. And it's business growth, having a framework, working your framework, understanding your numbers and the data behind that, and then creating leverage in order to grow that brand and the revenue and profitability around it. So very similar, yet it's just a different product is all. So been doing that as well as coaching a lot of people on how do you grow your career. I've coached quite a few CEOs. I do a lot of consulting for the marketplace about exactly what you're asking me about today, which is, okay, post NAR settlement, the lawsuits, things like that. I've done a lot of work with different analysts for Wall Street on that whole piece. So happy to be here, Dave.
So guys, anyone listens, who better than this guy to talk about what the future might look like? And we'll try to cover everything from right now. The date is August 17th. Who knows whether that date will change? It seems kind of like incomprehensible that this kind of change is going to happen within that time frame. But the way I look at everything in business is that's where the ball lies. How do we turn it into an opportunity today? And then how do we turn it into an opportunity so by 2025, 2027, anyone who follows me has gained market share and is winning. And so Dave, let's try to unpack like what are 3 or 4 things that we think is going to be different about real estate over the next coming years. I've got some ideas on that. But first of all, anything you want to kind of like as we get into this opportunity conversation, anything you want to frame the whole change around? Like how do you see this change? And then let's get into some ideas that will be different.
Well, realistically, Dave, we've all been wondering when there's going to be this massive disruption in the industry, both in the real estate as well as mortgage, and of course in title also. And that one, I think we see looming on the horizon at some point. The way that title insurance operates and things of that nature. But ultimately, this is like a big reset for the housing space in general, whether or not it's the transaction of the property or the mortgage or the title. We're at a reset point. And those that participate in a reset have to look at it like an opportunity. If you look at it like this is a challenge, I don't like it, I'm going to dig my heels in, which, by the way, we are notorious for in this industry. We hate change. But what separates the wheat from the chaff, or that 20% from the 80%? It's change. And it's the flexibility and the foresight to take a look at this and say, where can I do better for the consumer? Where can I make more money? Where can I generate more business, create more efficiencies? By the way, we have this thing called AI being mixed in with all of this right now. So there's a great opportunity right now. And I think if we write down our opportunities and we operationalize those opportunities, so you have generalizing things, which is like, I'm going to do more deals this year. That is an emotionally unintelligent, or emotionally immature way, I should say, of approaching that. You're emotionally immature if you cannot be specific in what your goals are. I'm going to do more business because of the disruption. How? Give me an operational perspective on that. What are you going to do operationally to do more business? And you got to figure that out, and you have to implement it. You have to consistently do it, and you have to make adjustments and focus on customer experience and employee experience for your internal organizations. But ultimately, what are we going to do specifically to make this better? And there's a lot of options out there right now. I think we're probably going to dig into some of those.
Yeah, we are. Well, I don't think I need to get validation from you on this, but when I do truly believe it's a reset for housing. I think there'll be a lot of ripple effect in mortgage, to your point, title, and everything has to get more efficient. I mean, at the end of the day, we're giving consumers more power and more transparency to make better decisions for themselves. And I think that listing agents have already been really process driven compared to a buyer's agent's. Like, hey, they give a presentation, they negotiate comp, they get a signed agreement. It's a proactive process, and buyer's agents have never had to do that. And so I firstly think like buyer's agents are going to need to become more process driven and have a really good presentation before they show a house. Any thoughts on just how this will, I think, professionalize and create an industry that is more process driven?
That's a great question. We've always said that, essentially we are a Pareto principle industry. Top 20% do 80% of the business. And it's true. And if you look at the churn of the industry, you also see so much of the realtor population churning over, every 3 years. They give it a try for 3 years and they're like, oh, this isn't working for me. I need to go back and be a better school teacher or fireman or whatever it might be. But ultimately, yes, this this is something that everybody needs to focus on. When you look at the buyer's agent has, and some would disagree with me on this, but I would say some people, this has been like riding coattails when the market's good. Some buyer's agents have been, this is fantastic, let's go throw some offers, things like that. Now we also have that 20%, some really, really damn good buyer's agents out there who do what they should be doing today, and these others should have been doing with respect to really defining their value proposition to the consumer or the buyer for that matter. And then you've really eliminated the question of why am I paying you this commission or why are you earning this commission? Because ultimately it comes down to, do you have a buyer representation agreement or buyer broker agreement? Now, first of all, I run real estate companies. I'm not a real estate agent. I'm not out there representing buyers. But ultimately, when you look at clarity and communication in business, it wins the day. And that's what we're trying to establish here, and what NAR is trying to establish and the plaintiff's attorneys are trying to establish with these settlements. And they want clarity, they want transparency in what that commission is, and they don't want this, oh, don't worry about it, or you're not paying for it or anything like that. They just want us to be upfront with it in the industry. And that's great because it gives you confidence when you're upfront with people about things. If you confidently drop information in their lap and you have a smile on your face and you communicate with them regularly, you build this thing called trust. And we all know that you're not doing these large financial transactions without trust. And you're certainly not getting a referral out of the deal if there's no trust or repeat business out of the deal. So ultimately, it comes down to, what are you doing to basically do what call it a dozen and a half states in the US were already requiring, buyer representation agreements, but tighten the thing up, demonstrate your value better. I know you've heard this a million times in the space, but if you're in the mortgage space, please know that people are going to be adjusting a little bit to this as they get their flow down with the whole thing. And they need your encouragement. They need your help when it comes to role playing or satisfying the customer's needs this way. And frankly, you're helping the buyer's agent with the buyer, or you're bringing the buyer to the buyer's agent. So I think it's incumbent upon everybody in the mortgage space to be a little bit more involved also to make this flow better.
Yeah. And I think it's a great opportunity for lenders because historically speaking, I think most realtors have picked their lender on, do you close the loan on time? Do you handle transactional drama in a pro way? Do you get a 5-star review? And do I like you? Do we vibe? And I think it's going to get real estate agents to go like, hey, what are you doing at the front end of the process? Like, how are you creating value for my consumer beyond the transaction? And one of the things that Mortgage Coach was built on the concept that people don't get loans because they want loans. They get loans because they want homes. And the true American dream is home ownership with financial freedom. So it's like that advice of different mortgage strategies, different real estate strategies that help the consumer build wealth over 5 years, 10 years, 20 years. And my thesis is that it's going to put a lot more pressure for mortgage and real estate professionals to be better real estate advisors, to be better mortgage advisors. Like, advice is going to win on the other side of this. Any thoughts on that?
Yeah, I mean, if we unpack that a little bit, first of all, you're spot on. But the first question that comes to mind is, okay, mortgage professional, do you have a couple of pages that goes into that buyer representation, their whole presentation now? Because we know we have listing presentations for those that are listing a home, but now we get listing presentations for the buyer representation agent. For that buyer's agent, they're going to come in and they're going to be like, here's why you should use me. Because the consumer, let's face it, the consumer is going to be a little more specific as to what they want now that they know that, first of all, they potentially could end up paying for part of this commission. But the likelihood is they just heard, hey, demonstrate your value to me, buyer's agent. So why wouldn't that buyer's agent have a really cool piece in their presentation that you gave them that shows all of the collaboration that occurs between you on the mortgage side and them on the buyer side of the real estate transaction in order to enhance their delivery to the consumer? What's this going to do? It's going to win business for everybody. So ultimately it comes down to, how do you work together better and communicate better without there being any sort of silos in the space? And I get it. The top mortgage people work with generally the top agents, and they stick together a lot because you can, as Dave was talking about, you can deal with the drama, you can communicate effectively, you can create rescue loans and things like that when, let's face it, things don't go the way that we always want them to in this transaction. So ultimately it comes down to, how can you educate that buyer agent better and be part of their presentation? And obviously a big part of that right now is, first-time home buyers, VA, FHA, things like that, as well as what's going on with the Fed and interest rates and what can I afford? Housing affordability is at an all-time low right now. How can we make it a little more appealing to try and jump into this? So, you got a lot of great things to opportunize there, I guess, if you will, Dave.
Yeah. So I hope everyone in the mortgage space caught that you need to have something, whether it's a buyer's agent, whether it's a listing agent, in your agent's presentation. I'm going to show you something, Adam. This is actually what I think, especially with first-time home buyers, a loan officer can deliver value beyond just pre-approval by showing, hey, rent versus owned. And it's never, we have an affordability crisis in America. So showing house hacking strategies, like down here in the bottom corner, it's net worth over 5 years. And most people really don't understand the power of leveraged mortgage with real estate. Like this particular example shows rental income increasing by 6%, property appreciation rate by 4%. By the way, this particular report is in Denver, Colorado, a place that I think you're pretty familiar with. What is the average appreciation been like in the Denver metro? Any idea?
I haven't looked that up recently, so
Well,
maybe you can tell
four
me on that.
percent, I'm pretty sure is pretty conservative.
Yeah, it is. I mean, Denver is one of the least affordable locations in the U.S., and I know the appreciation continues to rise pretty substantially here. And obviously we also see that in the higher end communities. Average home price in Denver is really difficult to hit for the first time home buyer.
Yeah, well, and this is the example, the kind of education I think the loan officers and realtors need to bring is like, hey, show the first time home buyer their net worth over like 3 to 5 years.
Yep.
And then to your point, it's never been harder to buy. So you need to show house hacking strategies. Like, hey, what if you bought this 3-bedroom house, rented out a few bedrooms, and invested that, at 6%? Now, what does your net worth look like? Like, I think old enough to drink, 21, people should know how compound interest works. People should know how leveraged appreciation works with real estate. And I don't think enough, like, forget about 20-year-olds knowing this. I don't think a lot of real estate agents really understand these numbers. And I do think this NAR settlement is going to put more pressure on both mortgage and real estate to be trusted advisors and to deliver an experience of advice to a consumer. Any thoughts on that?
No, you're completely right. It is putting a lot more pressure on it. It is shining a light on the fact that we have had a lot of people in the industry that have just gotten by and they weren't very skilled. So, you've heard all the analogies in the space of, hey, would you pay your, surgeon who just started a couple of weeks ago the same as you pay a surgeon that started 20 years ago? No, probably not. Same thing with, any sort of skilled services. Somebody's an apprentice versus somebody is, a master at this. You're going to pay the master more. So I think people recognize that in what they're paying for now, and they want value and they want a great experience. They want to leave this most stressful time in their life. What are we like? One of the top 3 most stressful things in people's lives. But they want to come out of this going, wow, I got my home. I'm happy about this. And I felt like I was treated with dignity, respect, and given the utmost value I could possibly get. And it's fascinating because when you think about it that way, we're seeing a lot of doors open for opportunities to get in front of customers right now. People aren't taking advantage of those. So for instance, I volunteer with the county here that we live in. I think we got about 500,000 people in the county. So a pretty substantial size group of employees in the county. And there are a very good mortgage person just came in and started creating home buyer workshops for the county employees. So the county HR department is all over this because they're into wellness and financial education, things of that nature. And that's how this is being positioned, Dave. You hit the nail on the head. We can give you a financial projection here that, if you do things based on these numbers, here's what the results are that our system is spitting out. You can't make any earnings claims, but ultimately it is kind of interesting because you're in a space where you can show some examples. So why not? But you got to get in front of people to do that. So go talk to these different groups and get in front of those customers. And the first time you're going to suck at it, the next time you'll be a lot better. And then create some YouTube videos and start putting them out in the local community on Nextdoor or Facebook or, YouTube or something like that. And people are going to go, hey, Dave, I saw your video or I came to your presentation. I'm interested in talking to you because we want to move up or we want to, relocate or something like that. And I think it's time. So it's a great opportunity.
And I'll let you pick whether you want to, by end of year, the changes happen, or you want to pick a time over 3 years. What are some of the real shifts and trends that you see happening? And first let's just start with that, and then I'll ask you, like, how could people take action on that? What do you think is going to be different?
I think the first thing is people who are in the National Association of Realtors and are spending money on MLSs and data and, you know, the state, local, and national association ladder that you have to be part of. You know, it's being anticipated that they will lose some membership. I tend to agree with that. So find the agents that are doing business instead of just going out trying to find agents. So I would say, you know, the mortgage space needs to be as specific as possible. And, you know, the whole theory of the more money somebody has that you do business with, the easier it is to do business with them, I think is very true because they understand value. They understand, okay, I'm not trying to rub two nickels together to get into this mortgage. So, you know, find an agent who's doing houses, selling houses in the middle market and above, and work with them more than trying to, you know, yes, entry level people, first time home buyers need help. But I'll tell you what, that's a harder transaction to do than that middle market and that top of market. But ultimately, you know, figure out where you want to play and play there, but do it intentionally and work with those people. I always give this piece of advice. People always ask me, hey, if I'm starting a new business in an area, who should I talk to first? I'm like, the best real estate agent, because they know everybody. And sure, they might have they might have somebody in lending already, but the reality is they want to work with who's the easiest one and frankly, the most enjoyable one to work with. And if you can come in and help them, hey, you never know. They might be upset with the last loan that their guy did or whoever it was. So, you know, I would definitely take some action in that space.
What else? What do you think? What are going to be some of the most dramatic changes? You know, 3 years from now, 5 years from now, how do you see, you know, the real estate space change in the
I
most
think
profound ways?
I think we're going to see some consolidation, especially, you know, once these settlements start trickling down to the bottom of the market, because everybody's being gone after right now in the real estate space for settlement money. And, you know, NAR really backed the bus over this $2 billion club. And that $2 billion club is made up of a lot of great agents. So when you take a look at it, where are people scared? Where are they trying to figure out how do I make a little bit more money? And who's coming alongside them and saying, let me help you. Let me work with you and let's see what we can do together. You know, the beauty is the folks on this podcast generally are not being singled out for settlements in this. So go work with those people that are and see what you can do to help them build their business. But I do think there's going to be some consolidation on that level. I think, and by the way, we haven't seen the DOJ come into anything yet. So who knows what they're going to do, but I think that's going to happen after the election, frankly. You know, we are in an election year right now. Anything that's going on in the government generally tries to benefit the incumbent in the election. So, okay, what's going to happen here? You know, the DOJ might wait until the first of the year or after that, depending on who wins, to come in and create any more greater enforcement, or the CFPB or whatever, in order to make further adjustments on how different aspects of the real estate space work. Generally not going to impact mortgage as much. You know, there's going to have to be obviously disclosures and everything that occur, but ultimately it's going to come down to you're trying to get over fear. You're trying to get over fear in a marketplace. So, you know, what we're seeing with the settlements is as the settlements occur, people are kind of going, okay, I can take a deep breath now and get back to work. Obviously with, you know, the Fed and where interest rates are, we got to get over that because, you know, that's a double-edged sword here. What's it do to inflation? Can they start nudging rates down? Inflation is not playing well with the rates. So we're trying to overcome some of these things, but ultimately, key aspects, you're going to see, I would plan on seeing some leaning out in the space. You're probably going to be working more with people who are not realtors, but have a real estate license. So there's a good possibility of that. So I would make friends with as many of those people as you possibly can. And then, you know, we'll see what happens with the regulatory environment, but this is a regulated space. Keep doing the right thing, follow the rules, and I think you'll be fine with that, but be confident with it because people are looking for fear. And if you have fear, people are not going to want to do business with you.
Yeah, I love what you said earlier. Where was it? It was figure out your niche and be intentional about that. I just can't remind everybody enough. You niches, there's riches in niches. Now I have a little bit of a different take on first-time home buyers where I really believe that everyone needs a first-time home buyer strategy.
True.
Now, is that going to be 20% of my business or is that going to be 80%? But my thesis on it is, hey, even if you are, call it the highest end level of agent, uh, everyone that you're doing business with, they have kids and they have equity. And there is a financial literacy crisis in America. There's an affordability crisis in America. And I do believe we need to change the narrative in America where families need to start planning for home ownership for their kids right away. Like if you go see a financial planner, they're going to come up with a retirement plan. If they have kids, they're going to go right into what is your plan for paying for college? But they're not like, what is your plan for home ownership for your kids? And I do believe we live in an era going forward where we need to do that. And so I think everybody needs to have a first-time home buyer niche. It's just a question of, what percentage of your overall volume do you want that to be? Any
I
thoughts on that?
Yeah, I would agree with that. And don't get me wrong, I'm not saying abandon the first-time home buyers, especially our VA and those folks that are trying everything they can in order to purchase. Um, you're right. I mean, I have three kids in their 20s, and we're absolutely having this conversation at the dinner table on a daily basis, or when they're around on a daily basis. And frankly, they're scared of their ability, especially in the Denver metro area, to get a house. They know it's an uphill battle and it's very challenging. And my financial advisor has worked with us on that. However, not as extensive as what you're talking about. So there is a lot of room to fill in there for the first-time home buyers when it comes to wealthy parents. The bank of mom and dad does a lot of good for these first-time home buyers, and frankly, gives them a little bit of diversification as well. Because what we know is real estate is a great place to invest your money.
Yeah.
So yeah, you're right. I think it's a niche that needs to be a diversified part of your portfolio. But I also would say, because you are going to run into first-time home buyers on a regular basis. However, they are a little more time consuming than that person who's selling a house and buying another one. So, and maybe they're not if you've gotten them down a certain way. But
No, there's a deeper level of education. There's a deeper level of preparation to help them. By the way, I founded a nonprofit called First Home IQ, which is dedicated to educating and inspiring Gen Z to get into homeownership younger. There's a quiz that your kids can take online, and it's all about just homeownership preparation. And for anyone listening to this, there's never been more down payment assistance resources in history. And we have a great piece of technology called down payment resources that Zillow uses, Redfin uses, that makes it easier to figure out what kind of down payment resources are available out there. So Adam, let's go into wrap up mode. Any one closing thoughts, and then two, how can people best follow you, stay in touch with you, learn from you going forward?
awesome. I would say closing thoughts, how intentional are you in what you're doing? And I want to give a little bit of a story that my wife, kind of shamefully told me about this. But by the way, she's a retired real estate agent, but she's also competed in fitness competition and has trained really hard. And we're in our 50s. So I can tell you, when you're training for fitness in your 50s, it's not quite as easy as when you were in your 20s. But ultimately, it comes down to this. We came into the gym one day and I was walking around picking up weights and lifting the weights and putting them back on the rack and things like that. And she looked at me, she goes, "Are you training or just exercising?" And I'm like, what do you mean by that? She goes, "Well, the doctor says to exercise like, 20, 30 minutes, 3, 4 times a week, whatever it is." She goes, "Are you doing that or are you using some way of getting better?" So training would be understanding your nutrition, how many calories you have coming in, how much fat, how much carbs, how much water you're drinking. And then combining that with, okay, what are your exercises for working out that day? And are they written down? So you might have, I'm going to do curls and I'm going to do this much weight, this many times. So this many sets of this many reps, that's how many movements you do. And then here's how much I'm going to increase what I'm doing every time. So you're putting stress on yourself in order to get better instead of just going through the motions. Because if you go through the motions, you're not getting better, you're staying the same. What happens when we stay the same? We get worse, ultimately. So how can you add a little stress to what you're doing and record what you're doing? Sounds like a coaching program, doesn't it, Dave? But
It
ultimately,
does.
yeah, I mean, let's try and make ourselves better every day. Maybe, you talk about first-time home buyers. I'm going to call one more first-time home buyer today, but I'm going to call two more, of my past clients and see what I can do for them as well. So how are you going to expand your limits when it comes to this? And let me add a psychological principle here a little bit to what's going on. We set the bar where we're comfortable, and we like to have it there. I was coaching a sales team in a medical device company, and they sold these genetic tests to family physicians. And the average family physician has, call it 400 customers, patients in their practice. And this sales team would go in and they would sell two of these tests to each family physician. I'm like, two, and they have 400 customers. That's your TAM in each one of these is 400 customers. And the guy I was coaching, who was, he was kind of mediocre in the whole thing. They brought me in to coach him, and then I ended up coaching everybody. So he's doing this business based on selling two. He walks in, he's like, hey, you want to try a couple of these? People are like, sure. And I said, well, how many of these tests could a doctor use? And he goes, well, it's probably about 20% of their patients absolutely need this. I'm like, so that's 80 people out of 400, and you're selling two. I said, why don't you go in and change what you're saying to this person and say, and here's the training part of this. I said, go in and ask the doctor, say you have 400 patients, 80 people out of this 400 really need this test. How about we start you with 20 and then we move up from there? And he goes, okay. And he went and he 10x'd his sales instantly by just changing where he set the bar in how he talked to people. And then they went and they did more and they did more and they did more. And you start closing that gap from 20 to 80, but you look back at it and you go, well, they were only doing two. We instantly 10x'd them, then 20x'd, then 30x'd. I'm like, there you go. It blew up the sales for this company. So what can you do in your business? And I know it's not a mortgage, it's a medical test, but what can you do in your business to raise the bar to get more out of what you're doing? That's the question here that we all have to ask.
I love that. And are you training? Are you exercising? And powerful close. So is the best place to follow you adamcontos.com?
That's right, Dave. I actually have when you look at the mindset and emotional intelligence, emotional maturity, employee engagement. By the way, employee engagement is like at a decade's low right now in business. So everything really kind of sucks in business right now, which gives a lot of opportunity. I'm actually launching a get promoted or grow your career type course that deals with all of these different aspects, everything from the psychology to the presence aspect, building your personal brand, becoming an executive in your business, not just doing better in your sales, but doing better in your sales to do better for your company and growing personally that way. So go to adamcontos.com and check it out. That's get promoted, and I also have the Leadership Factory in there that is my my master course on growing leadership. And, if you need anything from me, you can get me at adamcontos.com.
So guys, check it out. Here is the website. Check out the Leadership Factory. Check out everything he's doing. He's got a podcast. He's got a book. Start with a Win blog. You're killing it, man. You've got a great YouTube channel. So make sure you follow this, guys. And I talk about this all the time, that technology is changing the world. Technology is changing our industry. Data with technology is changing the world, but to win, to change, it's all about leadership. Like it's 30% data and technology, it's 70% leadership. So I really recommend you guys follow Adam. Adam, it's been a great conversation. Appreciate you, my brother. I look forward to keeping you more often. Like, let's not wait another, what is it, 2 or 3 years to do this.
Yeah.
Let's try to get a little rhythm going. Anyone watching this, if you haven't already, subscribe to our YouTube channel, subscribe to the Mortgage Coach YouTube channel, and make sure you follow Adam. This is a wrap. Take care, everybody.
Thanks, Dave.